Ladies and gentlemen of the interwebs, we are live for the weekly Beacon TVL show. Got the original crew back here today. Got Andrew, got Gabe. Been a while, gentlemen. Good to see you both. How's everyone doing today?
Yeah, good. Happy
Great.
to be back, Chris.
Yes, indeed. Happy to have you guys here. And really, it's been an interesting weekend. I think that's an understatement to talk about how different the market is today than where it was this time last week. So if we look at, if we're looking at CoinGecko and we're looking at the market, obviously, we're quite a bit higher looking back at where we were the last 7 days. Had that big, huge drop off. Market just flipped in a nasty way. So we'll kind of talk about that. So I want to say it's been all over the news, but in the event that you haven't had a chance to look at the news, what happened over the weekend was led by multiple factors. We saw Bitcoin plunge below 50K on a couple wicks. Ethereum dropped under 2,200. A 20% sell-off roughly across the board. Huge. It was pretty much probably the largest decline since the FTX collapse. We saw over 841 million liquidated from leveraged traders, 341 million in DeFi lending positions, all to the chagrin of Aave. We'll talk about Aave in just a minute. But yeah, a lot of things that kind of contributed to this. Do I have an article on this? Nope, not yet. So there's a lot of things that kind of piled into this, and I'll have you talk about this, Gabe, in just a second. But basically, a huge factor of this was the Japanese yen carry trade with a Bank of Japan rate hike. We had multiple major corporations selling large amounts of stock, Berkshire Hathaway being one of the largest, which brought about talks of a global recession. We're looking at the idea of an imminent war in the Middle East. We saw Jump Capital also, unstaking and holding about 400 million in USDC, which all just led to a really bloody market over the weekend. So, Gabe, just wanted to kind of, I know you're probably the most eloquent about specifically what happened in Japan, but to just kind of let anybody know who doesn't really know about the yen carry trade, why this kind of caused such a ripple worldwide.
Okay, so I guess the way to explain it in a simple way is essentially, as we've seen central banks raise interest rates across the world, Japan has been one of the few that stuck very close to or at 0% for a very long time. And what this has caused to happen is essentially major players in the global scene has been borrowing a lot of Japanese yen in Japan because the cost of borrowing is so cheap there, considering the low interest rates. And then converting them into other currencies. This has also, increased the decline on the Japanese yen over a long period of time. And yeah, I've been watching that drop for the last couple of years as this became more and more prominent. And essentially, what's happened at the start of this weekend was Bank of Japan did a surprise raise on their interest rates, on the federal funds rate is what we call it in the US. And that's caused that yen carry trade, which is called, to start to unwind. People are expecting or expected higher rates to be coming to Japan. And everyone's rushed to start buying Japanese yen to repay their loans and unwind their positions that they've had set up for a long period of time. And yeah, like you mentioned, that was also paired with disappointing US jobs report data, which exacerbated the recession fears. Obviously, US jobs data and unemployment is a very good leading indicator of an upcoming recession. So yeah, these two things happening around the same time caused a big red day in the market. Certainly an historical event. We saw the Nasdaq down 6%. We don't see days like this very often. So Yeah, certainly an interesting weekend. We have seen some relief at the start of the week here. A couple of green days now with some rebounds. But that's pretty much the short of it. That's what happened. Any thoughts from you on this, Andrew?
I think it's really a sign of DeFi's maturity that nothing broke. Aave liquidations worked properly. Maker worked properly. A lot of the core primitives of DeFi just weathered the storm. So we didn't see anything break, which is great. I think it's interesting to now see the kind of rampage of articles in the news questioning the value of the enormous investment that's gone into generative AI. Like, we're just in a period of a spike in fear, sell-offs, and then everybody goes and questions everything that they've been investing in for the last couple of years. But really bullish for the maturity of DeFi and the future that DeFi has in front of it. That it didn't show really any cracks during this historical event.
Yeah, and I think that's kind of the key, right? One entity that did really well, obviously, was Aave. They raked in over $6 million in revenue off of liquidations, which is, part of their model. A lot of people will, deposit and then borrow collateral off that collateral. And, this is a truly normal story of the house winning, the system working the way that it would. One position they got almost 800K off of, just off of one $7.4 million ETH position. Now, it's unfortunate for all the people with forced selling and the people got liquidated, but the system, of course, it held up, as you said, and that was the beauty of all of this.
It's a lot less stressful to be in DeFi than to be in a yen carry trade. That's for sure.
Yeah, that's true. And, we're still nowhere near. I mean, we certainly aren't in a V-shaped recovery, but there's clearly a bit of a recovery happening, over, since what happened, looking with Solana as the leader on the bounce back of that. But what's interesting is that on Monday morning, that was the one thing we were really curious about. What was going to happen Monday morning on the stock market? Well, at least with the BTC ETFs, 1.3 billion in the first hour. I think with BlackRock getting 800 million of that. So that just kind of shows that, a lot of investors wanted to come in and buy this entry. I mean, this is clearly a very, very juicy entry for a lot of them. So not surprised by this, but that was quite an influx of money that came in literally in that first 20 minutes to an hour on Monday morning. So I do think we'll continue seeing inflows, as we are stuck at this range. I guess I don't want to say stuck at this range, but where we are at this range.
Yeah, we did see Bitcoin briefly plunge below 50K, but there seems to be a lot of bids there, a lot of interest. Like you said, we saw major inflows around that price, and currently we've jumped back, sitting just above 56, I think, right now.
Yeah.
Yeah, so certainly 50,000, I think, is a strong support level for Bitcoin right now. Hopefully we don't retest it again.
Yeah, and I think that's really the talk of the town right now. Is like, what can happen to keep this going? Because I do think we still have a lot of cues coming up over the next couple of months, right? Bernstein is still calling this a Trump trade because of what's going to be happening over the next couple of months. The election, macroeconomic events, we normally call October Uptober, and I do still think we're still going to be running into that. So for anybody watching who's curious about are we selling? No, this is a prime accumulation zone for stuff like this, because we are expecting more things to happen, especially with this yen carry trade. Depending on how the rest of this week goes, we might see an injection of liquidity in the system, which of course would be more bullish for crypto overall. So
I think it's
go ahead.
It's interesting to see crypto prices swing so much and move so much based on something like what's been dubbed the yen carry trade, because ultimately whatever is happening with the yen has nothing to do with crypto, right? It has nothing to do with Bitcoin. So most of the selling that we saw is more panic selling as we see stock drops. People have been speculating on the price of Bitcoin getting out quick, while we're looking at whale wallets or long-term holders. All of those metrics are going up significantly during this period, right?
Yeah, the number of people on my timeline that talked about crypto is not for the weak and just continued to keep buying, I think is a strong code sign of what you just said. So yeah, I do think that there's going to be continued buying through this point, more accumulation. I definitely think we'll see more inflows instead of outflows over the next week, but I think it also depends on what happens here with the Bank of Japan. And you wouldn't think that it causes ripples, but because of how the money that comes out kind of feeds other systems, butterfly effect is really interesting. You wouldn't think, but
yeah, I certainly think there's a lot of funds left in that yen carry trade that has yet to unwind, and we're going to see a continuation of that over the next month or two.
Right.
But once again, I don't necessarily think that should have any impact on crypto. Whether it does or not, only time will tell.
Any additional thoughts, Andrew, before we kind of move on? Because we will kind of talk about this, because I'm going to talk about Arthur Hayes.
I mean, not really.
Okay, that's fine.
Go ahead and move on.
No, you're fine. So one thing I did want to inject, as part of, in the limelight of what's going on with crypto, obviously crypto becoming a very mainstream issue, both in politics, but also as well as as in terms of just traditional TradFi. Morgan Stanley, as of today, is opening to their wealth advisors to, I think, so it's specific clients. Just the access to actually get into Bitcoin ETFs, specifically BlackRock's iShares and Fidelity's Wise Origin Bitcoin Fund, to regular banking customers. This is actually, I believe, the first major bank that's doing this. So I think this is actually a very interesting sign. I wonder how what other banks will follow based off of this. I think this is very eye-opening news. I don't know, how do you feel about this, Gabe?
Yeah, I mean, it's just another sign of continued institutional adoption. And I mean, during the crash, we didn't see BlackRock, Fidelity, Grayscale, MicroStrategy. We didn't see any of these giants rush to sell or panic sell. And yeah, this is just another sign of that institutional adoption that has been coming for a long time.
Yeah, and Saylor mentioned he was selling Class A stock last week before this crash happened to buy 2 billion more in Bitcoin. So yeah, I mean, it's full speed ahead. Especially at these prices, it's kind of a given that MicroStrategy is going to buy more Bitcoin. But yeah, so we first started seeing state pension funds. Michigan just became the third state to do this, and now we're seeing Morgan Stanley, jump in. I do think we're going to see more everyday access to the Bitcoin. Obviously, you can buy it from a regular stock market as well, but I think we're going to see more integration of this moving forward. So what I want to get is, if you're here in the comment section watching us live, Let me know. Does your bank if you're a customer of Morgan Stanley, are you being offered this? Curious to know how many people who are watching have gotten this invitation. So, but speaking of invitation, I did want to bring up our free group, Total Value Locked. Of course, like the stream, help us in the algorithm, subscribe, get notifications, join our free group here at school.com/beacon. Learn from the best in business if you want to become a DeFi investor. We are on our way to 1,000 members. Thank you guys so much for being here and supporting us since we've launched TVL February. And it's been, what a ride it's been. Having a huge group of people. We're having our next monthly boot camp. If you're interested in joining our Beacon Accelerator, we'll have more information on that this week coming out on TVL. But join all of the others that are already here and learning about how to become a DeFi pro from the best in the business for free at school.com/beacon. So we're going to move on to, man, Arthur Hayes has been on one for the last month. He's been writing. He's been talking about some interesting things. If you happen to catch up with Arthur Hayes, he keeps calling U.S. Department of Treasury Secretary Janet Yellen bad girl Yellen with a U. And I find it rather entertaining. If you don't follow Arthur Hayes on Twitter, please follow him. He's quite the read, I must say. He is making all kinds of interesting things. He just put out an article this past, I think it was yesterday? Yes, yesterday, called Spirited Away, which talks about quite a few things. The link will be in the show notes. Essentially, he feels that the yen carry trade is very important, and that there will be some strategies that he may have to consider in crypto if the yen continues to strengthen. If it continues to weaken, and if the Bank of Japan goes back on that rate hike, then obviously the crisis, I believe, is averted to a degree. But
I will note that as of this morning, the Bank of Japan has made statements saying that they won't do any more rate hikes if it continues causing instability in the market.
Yeah. But he calls the yen carry trade a strategic importance for the U.S. and probably other global banks around the world, mainly because of the ripple effects of how these things are affected because of what this carry trade has created. And as you mentioned, Gabe, the unwinding is going to be a very interesting event moving forward. And I definitely recommend, if you haven't had a chance to read this, definitely give it a read. It's a really good one. And to quote him directly, he mentioned that as always, these trading days and months will define your returns for this bull cycle. If you must use leverage, use it wisely and constantly monitor your positions. When you have a levered position, you better be babysitting your Bitcoin or your shitcoins. Otherwise, you're going to get liquidated. I mean, I think that's fairly commonsensical, but as of what happened this past weekend, you just got to be on it. Rip people who had leverage over the weekend. So, but yeah, he's going to have a follow-up next week, and he really is curious about what's going to happen with the equities market as of the end of the week, because he thinks that it's going to be a real problem for the administration, where he believes that the current admin would put the financial situation, if things start to unwind, in a hard way, to Secretary Yellen to act swiftly. And once that happens, that could be an interesting amount of different policies. So, any thoughts on that, Andrew?
The fundamentals of our economy are strong.
There we go.
It'll be fine. It'll
be just fine.
So, yeah, right now it looks like the yen has gotten kind of back in line. Anyone that's still in that trade is probably fine for now. And yeah, Japan's made it clear they don't want to rock the boat anymore. They're not trying to cause too many ripple effects. This is actually a fairly short article for Mr. Hayes, so it's probably only going to take you a 20-minute read, or actually probably a lot less than that, versus a 45-hour read like his articles often are. Rate cuts soon. I think to me, everything with the markets is just an expectations game. So there is the expectation that the Fed is going to act this way. There was an expectation that the Bank of Japan wasn't going to hike interest rates. And that was a surprise. And thus, the market does not like surprises. The market repriced accordingly. So I think we might be in for a relative period of calm as we head towards an election, and as we head towards U.S. rate cuts in September. But should there be a surprise, I think a lot of markets are in fairly precarious territory. Were there to be another shock to the system, I think it would be very easy for BTC to drop to around the 42K support level. If there is no shock, I think we're just going to continue ranging for a little bit while longer as things develop. So really, those are my thoughts. It's a great time to buy, but things certainly could go lower.
Do you feel it's a good time to buy altcoins?
Not particularly. There are specific altcoins that I'm interested in increasing my positions in. Very interested in Maker, very interested in Aave. But I'm not sure that the risk reward is really there to go that hard on them yet.
It's not the reason for the season just yet, right?
Yep, we haven't seen a capital rotation from Bitcoin to ETH. And so long as we haven't seen a capital rotation from Bitcoin to ETH, the fundamentals of the crypto cycle rotation does not support going hard into altcoins yet.
Fair enough. So one thing we talked about last week was Polymarket and how they've hit $1 billion in trading volume, the majority of it in the last 30 days. And interestingly enough, they've banked more than 500 million in bets on who is going to win the presidential election, which for a Polygon-based blockchain project is an amazing feat in my personal opinion, given where the market is, well, rather where everything is today. I'm curious to see if there's going to be some movement there, specifically with Polychain. Off the success of this, do they create their own layer 2 chain that specifically is, centered around predictive markets? That would be an interesting play, actually, because they could, build on top of Polygon's CDK and then have ag layer involved. So now everybody that is in the CDK can now have access to Polymarket chain liquidity for more building. So you can easily get people in through other blockchains that are part of the CDK with its wide movement with different CEXs coming in. So it's easier to get to. But they've done some things to make it easier, like they've integrated with MoonPay. But if they wanted to get decentralized, there are options for them to do so. In any case, it caused Elizabeth Warren and quite a few, Richard Blumenthal and a few other senators to come out and urge the CFTC in a letter on Monday to ban betting on the 2024 presidential election, citing that it could skew the election results, cause election interference, further erode the public trust in the spirit of democracy, and to stop the commodification of U.S. elections. First off, Gabe, I'm curious from your vantage point, do you really feel that people who bet on the, on the presidential election on a Polygon chain-based protocol is going to really cause election interference or anything like that?
Short answer, no. I don't think. I mean, the amount of money we're talking about is such a like if you compare with the U.S. national debt, it's such a minuscule amount that it's not even really worth considering. But I mean, crypto markets hasn't introduced betting on who's going to win the election. That already exists. You can already go and bet on that with most online betting sites, I'm sure. Certainly Polygon and doing it on crypto allows to do it a bit more privately. But ultimately, yeah, I don't think this is going to have any impact. I don't really know what they're talking about in that letter. I haven't read it, but yeah.
Andrew, you know something about politics. What do you feel about their complaint to the CFTC here?
Yeah, I haven't read the letter read about this, but I think they're not being very fun.
Right? Come on, be fun. Be fun. Let me bet on who. I mean, because this is the funny part is if you ever go to Polymarket and see the other bets that they have there, betting on the election it's child's play compared to the other things they have there that I think are hilarious. But
I think it's actually good for transparency to have gambling on things like this, because if there is information that hasn't come out yet and someone has insider information, that's going to be reflected in the markets. Be like, there's some whale that thinks they know something. They're betting against or for such and such candidate. I think it's also just it's like this is a betting on US elections is like a maturing ecosystem. It's not unlike DeFi. If you go back to previous election cycles, you'll see that betting markets were often in disagreement with polling averages and public models of the election. Right now, we're seeing a scenario where Polymarket is really just within a couple points of what modelers like Nate Silver are projecting based on a combination of polling data, economic data, and fundamentals. So, like, if the betting markets and the polls and the models are saying, hey, this is really kind of too close to call right now, that's a huge nothing burger. It's a huge nothing burger. That this just in, politics in America is heavily polarized. A lot of people don't agree with each other. And the whole thing could come down to 20,000 people in Wisconsin. We already knew that. There's really no new information here.
I mean, people bet on all kinds of things. To me, I think you unlocked an interesting idea of the idea of possibly monetizing polling, right? Because you could use predictive markets in an analytic way to just kind of get, incentivize people to give their true opinions on how they feel about certain issues, certain candidates. I mean, you could do this my eyes just opened up like a full, there's a huge opportunity here to try and not commoditize, but at least get a better representation of what your constituents really feel about you. Depending on how you even do that system. But I think, having a much more reliable way to poll people that they would feel, more comfortable about doing it. But that's a whole other can of worms. But anyway, Gabe, I think you have to roll out. So I just wanted to thank you for joining us. I know it's been a minute since you've been on the show, and I look forward to seeing you again sometime in the future. But I just want to thank you again for coming on with us today.
Yeah, thanks for inviting me, Chris.
Anytime,
next
brother.
time.
See you guys later. So Andrew, it's in the title, so I feel that I do need to talk about it with a huge disclaimer. I am a big Kujira holder. I've been in since day one. I'm a fan of Kuji. I was in Kujira when they were just a protocol on Terra blockchain called Orca, and they were a liquidation house where you could actually go in and not have to worry about bots and bid on people who are being liquidated on Anchor protocol. They after the crash of Terra, they came out within 6 months with their own blockchain and just created a huge suite of different, DeFi applications that I truly love. I think we talk about all the time in our group about not marrying your bags, but this is a project I have huge conviction in. I will say, what's that?
Are you engaged to your bags here, sir?
No, I'm definitely not engaged.
Have you handed a promise ring over to Kuji?
I don't know how I'd feel if I did that, honestly, because this was definitely like a gut punch. Let's put it that way. When I read about this, so Kuji just was dealt a huge blow in price when it came out that the team had taken operational funds and put them in leveraged positions in the DEX, in their Fin order book DEX, or probably in BO positions, or their Ghost AMM, resulting in roughly about a $3.2 million debt that has to be, resolved. This was huge. When I read this, my heart just sank because, I know we often say that good coin doesn't equal good tech, or vice versa. Good tech doesn't equal good coin, but they were building such really cool stuff. It was really hard to hear that, something as simple as that, and they let the positions liquidate. It was really bad. A lot of things that are happening. So they have a plan going out, talking about how they're going to try and clear the debt through a couple of different pilot sales. Pilot is a launchpad application within the Kujira ecosystem, and Kujira is a layer 1 blockchain in the Cosmos ecosystem. If you're not familiar with it, Kuji at one point was worth almost $6, and of course I was on the moon over that type of thing because I really do believe in what they were building. I still do, just so anybody's curious. But they have a whole bunch of things that they're going to be doing to reduce and mitigate this risk moving forward. Yesterday, I kind of woke up to this news from this gentleman named JP.Thor. Big into Thorchain ecosystem. He is a founder, not a Thorchain, but yeah.
Just want to make sure you're not sharing your screen.
I'm not sharing my screen. Thank you very much.
Yes, sir.
Yeah, so I just walked through all of this without realizing that I wasn't sharing my screen. Anyway, so this will all be in the show notes, but just talking about what happened with the 40% drop. Thank you for that, Andrew. And woke up to this tweet from JP Thor. Would like to definitely talk to him at some point, but the idea is that, it came from him talking about possibly, this is specifically about building an L2, but he is looking to join up Thorchain and Kujira, which I was like, what? Now that's interesting. There's a friendly fork of Thorchain called Maya Protocol that has Kujira inside of their cacao swap market. So there is a lot of I guess interoperability already that's already been built that they can build on top of. For those who are not familiar, Thorchain is technically a Cosmos chain from its roots. So to have an IBC and WASM layer built in an L2 with Thorchain, which is by far probably the best decentralized CEX, if you want to call it, out there, because they do offer native Bitcoin and native ETH and native AVAX and Atom swaps and liquidity. So the one thing that was big about Kujira is that they're not open source. So this move by JP Thor would make that all open source. And again, I might be just talking about this all out loud for hopium purposes, but it's good to see that there could be some movement here. He would actually personally fund the backstop of that debt that I was talking about earlier, and it would pretty much just send Kujira back into full send mode. So interesting to see how, certain people can wake up and think about really cool ideas for projects that have great tech but had some bad decisions kind of sideline them. So yeah, this is really good news for Kujira. I hope things work out, and we've seen projects kind of start to come back, and then obviously something happens and they don't make it all the way back. RIP to run protocol, for example, for things like that. But yeah, excited to see this news, and kind of walks into the next thing, which is something that I saw earlier yesterday, which is Vitalik Buterin put out his idea on how he plans to solve cross-chain layer 2 interoperability. I thought this was interesting. It's based off of a tweet that he put out. But he has this roadmap specifically to create the following EIP, or using rather the following EIPs to try and solve interoperability between all of them. Just to kind of go through it, because it's a lot to go through. EIP 3370 would create a new address standard, which would, I believe, change the way that addresses are done by making human readable prefixes, kind of like what Cosmos has. So on Cosmos chains, the addresses start with a word, or like, for example, I think near starts with near. Anyway, to make it more human readable for addresses. The one that's interesting for me is both 7683 and 3668. 7683 would have a new standard for builders to create, to be able to communicate with other dApps to go cross-chain. And then 3668 has light clients, which would allow applications to talk offline, meaning off the chain, with regards to sending data back and forth, which would actually help with both storage and cost of blockchain transactions. So I thought this was rather interesting for him to kind of put this out. Again, this is just a tweet with a roadmap, but I mean, the man has a gazillion things that run through his brain. We were just talking about Vitalik just the other day, Andrew, about just how much passion and just how much ETH the man has. Clearly, it's in his best interest to try and solve this problem. Do you have any thoughts on if this is an interesting, if it's a good approach to solving interoperability, at least in the case of ETH L2s, if that's a real issue?
I think without substantially more research, this is frankly kind of on a technical standpoint above my head. But I will leave the audience with this. All layer 2s on top of Ethereum ultimately settle on Ethereum. So we are moving in a direction. There's multiple roads and potential development paths that are being explored to get here. But we're moving in a direction where you're not going to think, oh, I have 10 ETH on Arbitrum, or I have 10 ETH on Optimism, and I have to move it between Arbitrum and Optimism. it's going to be that is just a representation of having ETH on ETH and kind of using Arbitrum and Optimism to do something on the application layer. So I think we're going to have to become more comfortable eventually with an idea that we can be in multiple environments at the same time, or really that like Arbitrum and Optimism are actually not different. And like that is the future that Vitalik is seeing, I believe. He's representing it in a very like technical way. But this is about improving the user experience. This is about improving time to finality and security, and ultimately making it so that we move in a direction where we're not thinking about which rollup we're using. We're probably going to move in a direction where we're allowing the application layer to worry about that, and that ultimately the end user is just going to be interacting with the application layer. So even me, I'm starting to go down like a sort of almost like I started non-technical and then like talking about the application layer, and you're like, what do you mean, Andrew? What's the application layer? I'm just saying, like, if you go to Uniswap, or if you go to Beefy, or if you go to any particular DeFi protocol, you're going to use that protocol without thinking about which chain you're on. Probably.
Eventually.
That's my prediction.
No, I think you're right, because in a lot of ways, the layer twos and the scaling here they're still siloed in a way, right? What this does is build infrastructure to make it easier behind the scenes for all of these different silos to not only talk to each other, but exchange data back and forth. Because essentially we're still talking about ledgers, right? We're talking about crediting one balance and debiting from another through smart contracts, through other mechanisms that are out there that can carry out just these transactions. So the ability to do it in a way that's going to be faster than 13 TPS, I think we're all here for it. And I think this is interesting to kind of see, just from a code standpoint, how robust and mature, like you mentioned earlier, how much more mature DeFi is today, or what it will be a year from now than what it is today, which is light years ahead of where we were 12 months ago, even 6 months ago. So
I think this is honestly, like, you probably remember, because I know you've referenced it before, but you probably remember when I said concentrated liquidity being the primary way that liquidity is provided is inevitable.
Yeah.
Just because it's so much more capital efficient that all of these like problems and downsides and complications and like the slow adoption, and I think we're still to a certain extent seeing that adoption kind of move linearly instead of exponentially. This is like that problem, but on a greater scale, because it is a huge problem to the efficiency of Ethereum and Ethereum rollups that liquidity is fragmented across all of these chains. That means that it's a worse user experience. The fees are higher. There's additional risks and complexity that is unnecessary. Yada yada yada. So this problem needs to be solved. And I think it's fairly inevitable that it will be solved. It's just a question of what is the path that's going to be taken and exactly how long is it going to last. Because we could be talking about something that takes 1 to 4 years to like get it right and then have it adopted. But I really think these things are going to happen, and things are going to feel very different and be very different in the future.
Yeah, and I think you nailed it on the head. Just the user experience and just making it feel like you're just in DeFi, right? And it doesn't matter what blockchain you're on, and having a nice unified experience where you don't really feel the effects of, liquidity fragmentation from being on different chains. Um,
I think it'll be. I think it's like this, Chris. It's like when you go to your TradFi checking account on your computer or your phone. Are you thinking about whether they're using Amazon AWS or whether they're using Google Cloud or whether they're using Azure? Probably not. You're not really thinking about what servers, what architecture they're using on the back end. You're certainly not wondering about, which version of Linux they're running their servers on. Like it's irrelevant to you and it's not something that you have to think about. I think in the future it's going to be like that in DeFi, where the roll-ups are, the back-end infrastructure, and it's very much more application focused. And I think that very easy application focused, simplifying everything down to what the user actually wants to do, is going to be key to tongue in cheek, I say, onboard the next billion users into DeFi, right? The next billion users into DeFi, not all of them are going to know what chain they're going to be operating on. They're just going to be like, yeah, I'm using Red Clown Swap. Red Clown Swap takes good care of me. I've got their application installed on my phone, and that's where I go and do business.
Yeah, man, I just want to sit here on the fishing at the lake, tapping on my hamster, and voting in the next presidential election, or betting on who's going to win the next presidential election. And I don't really care how I do it. I just want to be able to do it from my phone, on my flip phone.
Flip phone? I don't know about that.
It'd be like a Samsung Z Flip, right?
Oh, okay. All right, that kind of flip phone.
I don't know. I'm just
not doing it on
memeing.
Your Nokia.
No, I'm gonna do it on my upcoming Solana Saga 2, which probably won't be a flip phone, that type of thing. So still available, by the way, if you want to follow Andrew into that trade. We're gonna call it a trade. Founders Edition still not Founders Edition's done, but I guess the early adopter version of it is still available if you go to Solana Mobile. Check them out. I'll put that in the show notes for anybody who might be interested. Yeah, before we had to call for help, just wanted to, of course, thank Andrew for being here on panel today. Had Gabe on panel as well. Just a reuniting of the Beacon crew here, something we haven't had in quite some time. One to also, let you all know, join our absolutely free group if you like what you're hearing. School.com/Beacon. I'll put the banner here across the bottom. Again, Andrew was talking about concentrated liquidity. Surprise, it's going to be the focus topic for our next bootcamp coming up. So if you want to learn how to be a DeFi pro, join our Beacon Accelerator. You can find more information about that in probably the next 24 to 36 hours when we announce the next bootcamp. So want to just kind of put that out there. And again, if you want to join us, do so absolutely free. School.com/Beacon. Learn from the best. We have our trainings as well every Thursday, 4 p.m. Eastern. Okay, let's talk about call for help, where we answer your questions for the week. I had a couple of questions that I definitely wanted to address, and the first is actually coming from Doug in our TVL group, and he asked, with everything that happened this weekend, what's the best defense against crypto events like this? I have my answer, but Andrew, I'll let you answer first, unless you want me to answer first. It's up to you. But what is the best defense of mitigating against what happened this weekend?
So that's just mitigating against price go down.
Or just, yeah, how do you protect yourself from things, from events like what happened this weekend?
Oh man, there's a range of options. So I think the most important one is be skeptical of leverage, and if you utilize leverage, watch it like a hawk / do it with play money. I think being in LP positions, engaging in DeFi is also a defense, because instead of just letting your assets sit there and spot, you're earning yield on them, and you're actually benefiting when there's volatility that leads to trading volume. I think, depending on your outlook, depending on your time frame, there are going to be arguments for hedging if things are looking frothy. But to be frank, that isn't something that I do a heck of a lot of. So I think the main thing is put your assets to work and don't go crazy with the leverage. But it's also very personal, because it depends on your time horizons and your goals. And we're answering Doug's question here, and I'm just gonna pretend I don't know Doug at all. I don't know Doug very well. If Doug was 70 years old and in retirement, if I was Doug, I would behave differently with my portfolio than if I was 30 years old, planning on working or at least earning an income for the next 20 years. So it's very dependent. You're going to have a different portfolio depending on what your goals are, and then you're going to defend or hedge your positions in accordance with your outlook.
Excellent answer, sir. My answer on, because I did answer this question on our Monday accelerator call for our Beacon Accelerator and Mastermind members. This is why we teach, and again, if you want to learn more about this, join our free school group. This is why we teach about having an investment plan and also having an all-weather portfolio, because you will have a portfolio that is performant in any market condition, whether it's a bear market, a bull market, a base market. You definitely want this. You definitely don't want to be out there flying blind. You want an investment plan that you can stick to, something that's a framework for your personal investment ethos when it comes to your first principles. So I think you hit a lot of that, Andrew, in what you said. Yeah, putting your assets to work. So even if the market goes down, you might still be up. We talk about that quite a bit in concentrated liquidity, where, the pair can be down 50%, but you're up 400%. It's kind of crazy how things like that work. Yeah. So essentially that's the answer to the question on defense, is that you just are in assets that are fairly market neutral. Yeah, your overall liquidity amount will probably go down, but your positions won't be completely wrecked from being in correlated pools or things like that, stablecoin pools, stuff like that. Next question is, a lot of these I just grabbed from, people who just ask random questions in some of our forums. Does this really work? Because I lost a lot of money in Bitcoin and I've really lost faith in cryptocurrency. I've heard so many bad things about it, and who's behind it is even scarier. That's a fun question. I mean, I could tell you some pretty interesting things about who's behind certain things in regular fiat currency that might scare the pants off you, to be quite honest.
I got something to say, Chris. Look at you.
I know you do. That's what I'm going to let you answer second.
All right. All right.
I'm just going to give the answer that I give a lot. And the answer is really that if you're in crypto and then you're in DeFi, decentralized finance, which is different than just holding crypto, This is a journey. The reason why you're in this space, the reason why people follow this is because you want to control your funds. This is a journey about self-custody. If you can't trust yourself with self-custody, then maybe crypto is not for you. But if you believe in the freedom that comes with, holding your own digital assets and having the power to do with them as you wish and have that currency work for you, then how could you lose faith in cryptocurrency? If you weren't willing to buy at $100, $300, 16,000 or 68,000, it's just one of those things. You just kind of have to have the conversation with yourself about, why don't I have conviction in something that, honestly, based on everything we talk about on these calls weekly, it's going to be the future of how we do business. So that's how we feel about DeFi. And I know Andrew's got a very spirited answer coming up for me on this question. So you go ahead, sir.
You've talked about my answer too much. So I think the answer on DeFi is easier, because DeFi is just a new application of age-old systems. So market making is a very old business. Therefore, LPs, farming, engaging in most DeFi protocols, this isn't anything new from a what it is standpoint. It's just new from a technological and asset standpoint. So stock market wouldn't exist without market making. All DeFi is doing is democratizing your ability as an individual to earn money in the same way the top 0.01% of the wealthiest individuals and institutions do. Crypto, I mean, I don't know in the context of this question what this person means by believing in crypto. Like, if your belief is that the number is just always going to go up and never going to go down, then this isn't the space for you to be in. Because we're still in a phase of crypto's development where it's very volatile.
Yeah, you're totally right. So I'll go with the last question, and thank you for the answer. Is how do I get comfortable with knowing I can make consistent profits each month through this system? Do I need large capital to be able to make consistent profits? I mean, the answer is no. You don't need large capital. When we do our free trainings on Thursdays, like 4 p.m. Eastern, join our group to get access to those completely free. I purposely do most of my exercises with $20 to show you that, yes, you can absolutely go in with less than $20 and set up these positions. Will you gain more based on having more capital? Absolutely. We have multiple members in our mastermind who are making their lifestyle off of the passive income generated from the yields off of these positions. Does it take, a large amount of capital to get there? Reliably, probably so, but that doesn't mean you can't also do that, regardless of your capital in the system. So, but yeah, you can absolutely make consistent profits. It's all about what consistent profit means to you. Better than the savings account or the PVP market of doing stocks and just regular spot crypto trading? Absolutely. Your thoughts, Andrew?
There's a risk reward with everything in capital markets. So if you want to earn consistently and not worry so much about prices going down or prices going up, there's opportunities. Are there opportunities further out on the risk curve where you can earn even more? Absolutely. But as long as your expectation isn't, I want to 1000x my portfolio in the next, 6 months, and I want to be 100% guaranteed that I can do it and that I won't fail. I mean, that's an unreasonable expectation. So if you have just, the relatively smaller expectation of, can I consistently beat the stock market with just stable coins? Yeah, you can. Absolutely. That's pretty easy. You just have to learn the basics so you don't, walk off of a cliff by accident, essentially, while you're learning. But there's really no such thing as free money in the world. You need to understand where the fees are coming from, why you're making money that you're really just earning because you're providing an in-demand service that others are using. And once you understand that, it'll make a whole lot more sense.
Well said, sir. No such thing as a free lunch. No such thing as a risk-free investment. Yeah. If there's a way to get rich quick, I think we'd all be doing it, right? So, but with that said, so we got for you guys today. I went ahead and did a couple things of call for help because we honestly haven't done it in 3 weeks because we've had such great guests on panel over the last 3 weeks, and giving them the time. We're going to have quite a few more coming up over the next couple months for you guys to learn more about with new projects coming. So want to thank Andrew and Gabe for being here today. Andrew, anything you want to plug?
I'll be doing a live free presentation over on TVL tomorrow afternoon.
Yes, he will.
So check in this evening for an update on that.
Love it. Love to hear it. This man's a genius. Learn from him as you've learned from us. With that said,
so again, dramatic, Chris. So dramatic.
We're here every Wednesday, 1 p.m. Eastern, here on both YouTube and also on our Twitter channel. At Beacon DeFi is the handle for both our YouTube channel and our Twitter, our X. Please join us, follow us, subscribe, like. Would love to have the engagement. And again, join our free group. We're on the road to 1,000 active users. Would love to have you there as well. And we'll see you next week here with a different panel here on Total Value Lock TVL. 07.
Cheers.
Beacons up. Banks down. See you later.